Good evening, everybody. Welcome to your Monday Easter trading room. Let's get it started. Yo, I'm live from Brisbane, I'm from the sunny state. It's your boy Ricky here, I'm here to motivate, help your P&L rise and make it gravitate. Let's see what we find on the ASX and USA. We'll check some stocks to trade, maybe some option plays. It's Monday, yep, we're here to swing trade. Not one, not two, I'm here for 3 days. RLT Australia, yeah. It's a new craze, we are the new place, we are the new phase. Market education, we're teaching every nation. Chronologically, trading psychology, learning about option Greek mythology. In totality, we're the best academy, cause we're out there teaching more than just one strategy. Talk about gaps and candlestick anatomy, and how to stay in the right mentality. I'll share my knowledge to my full capacity. We're real life trading cause we trade in reality. All right, welcome everybody in the building. A few of you here today. How are you all? Hope you guys haven't eaten too much chocolate. I kind of feel a little bit sick from eating too much chocolate. I just sat here and scoffed down a whole bunch of Easter eggs for dinner. Yeah, so hope you guys had a great weekend, spent some time with your family. As you guys know that I was fairly busy creating that particular spreadsheet and getting it up and running for you guys. So we'll have a look at that. I did get some requests from you guys on some stocks that you wanted me to look at, and I've just got them here. You can see them there. There's just a couple here. I have prepared a presentation for you guys, just a small one, just to do with stop limit orders and limit orders. So I figured may as well do that as well and potentially give you a demo of, you know, the new options tool. Now, if you haven't yet added the tool to your dashboard, if you go to reallifetrading.com, right, or reallifetrading.com.au, go to your dashboard, and just down here, it'll be in your other resources tab. I did leave the instructions on what to do, but once you click add, we've also got one here. So once you click add, it'll bring you to this web page here, and obviously you won't be able to change any of these yellow boxes, any of these figures. So what you need to do is you need to come to file and then click make a copy, and that'll create a copy and it'll store it in your Google Drive, and then you'll be able to edit it and it'll be yours to keep. So hope you guys like it. Type in a 1 if you've already used it. Yeah, JP, you told me. Yeah, that's good. So I'll show you guys. I have had a few people look at it. They've messaged me before. So I'll take you guys through it and how to figure out, you know, where to get the particular figures and all that sort of stuff. But first of all, what I might do is, just to save a little bit of time, I want to go through. Is that the same for the trading journal? Yes, that is correct. So I think this trading journal that is here, this official trade journal, will be Jeremy's. So I know Shannon was actually asking for this at some point. He wanted to know what's current swing trades. He wanted to know what current swing trades the US team are in and what day trades they're using. So obviously you can come here to current swing trades, and all the ones that are open, these are all the swing trades that they're currently in. So, I mean, feel free to go through that if you guys really want to. They've got all the trade setups here on the right-hand side. I'll be doing the exact same thing. I may even get them to add it to this particular sheet where I can just add in the Real Life Trading Australia one. Not sure how I'm going to play it yet, or whether I'm just going to have a separate tile for you guys or just give you a separate link. So yeah, so with this one, if you guys wanted a copy of that, same deal, go to file. Oh, this one you can't make a copy of. Oh, sorry, you can. You just got to log in. So make sure you're logged in, and then you go to file and then click on make a copy. And that's how you do it. So first thing I want to do is I might just do this presentation just quickly, and we'll go through a couple of practical things just in a broker. And I'll do this on interactive brokers because I know a lot of you are in interactive brokers, but it will, depending on what broker you're using, pretty much all the same rules still apply. So it's going to be relevant to everybody. So I'll just put this up. Okay, can everybody see that? Broker order types. Perfect. All right, so I thought I'd make a video about the different types of broker order types that we would generally use when placing an order, because I know that a lot of people don't know when to use a stop limit order or when to use a limit order or a market order. Okay, so I've created this little slide for you guys, and hopefully it will shed some light on what to do in the future. So broker order types, what four main ones do we use? So there are four main types, right? There are obviously more, but the ones that you really need to understand are market orders, limit orders, stop limit orders, and stop market orders, also known just as a stop order. Okay, so what are market orders? So market orders get you into the order immediately at the market price. And this shouldn't be what you normally use because you want to be specific in when you're getting into a position, you want to be specific in what you are actually going to pay for that particular asset class. Now, other than a stop, when you're placing a stop, you do not want to use a stop limit order when you're in a stop, when you set it as a stop, because you basically just want to get out. Because if you have a stop limit order and there's a massive order that gets filled, you can potentially get you can potentially get skipped on your order. So a market order should be a very rare type of order that you generally use, and I pretty much never use them. The only time I ever use a market order is usually for a stop, or if I just don't care what the price is going to be, or generally if it's a tight spread. Yeah, so if you've got a stock that has a spread of like 1 or 2 cents, then I'm not really gonna worry too much. Generally, that's only in a normal market condition when there's not as much volatility and stock movement. The spread, which is the spread, which is the difference between the bid and the ask. If it's a really tight spread, like anywhere between 1 and 5 cents, then yes, by all means, you can do a market order. You'll just most likely get filled at the worst price in that spread. So these orders usually do get filled immediately. Does not matter what the price is, and the market maker can actually shift the price to make your order even worse than what it should be. So that's another reason why I don't like using market orders. But the good thing is it will get you into a trade almost immediately. So if you're looking at a long-term perspective and you're like, you know what, I want to buy at like $23 and some change, I don't care how much, once it gets to you know, $23, you can just select a market order. So that's what a market order is. Now a limit order, a limit buy is basically a price that you have selected to buy at or lower. So if the current price of the stock or the option is higher than where you want to get into, you would always use a limit order. Now, a limit sell is pretty much the same thing, but in reverse. So a limit sell, which is generally what you use as a target when you've bought a stock, right? You're basically saying you don't want to sell for anything less than a particular price. So where it says here, a limit sell, you want to sell at the selected price or higher. Okay, so pretty much try to use limits all the time. The downside to using limit orders is that you don't always get filled. But the upside is you will always get filled at the price that you choose or better. So just keep that in mind, how you're using limit orders and why. You'll almost always get filled at a good price. Now, when do you use a stop limit order? So I just want to split these two orders up into two segments. So a stop limit order, the stop side of that order, all the stop means, right? The function of the stop just tells your broker, stop, I want you to execute X, Y, and Z at my limit price. Pretty much just tells your broker, don't do anything until this price is hit. Okay, so the limit order, whereas if it was a stop market order, which I'll get onto next, that is what you would use when you're trying to get out of a position, right? And because you just want to get out at any price because you're trying to get out of the position. You don't want to lose any more money than what you've set out to lose in the first place. So a stop limit order is generally used to get into a position, not to get out of a position. So once again, the stop limit order just means don't do anything until XYZ has hit, and then here is my limit price of what I'm either willing to pay or willing to sell for. So you can have a stop limit buy, right? I use these all the time. And that's what I'm going to use just as an example for this particular strategy. And you can have a stop limit sell. I sometimes use them, but generally I don't, right? Because I'm always waiting for a retest to happen, and then I'll usually try to get in on a breakout or a breakdown. So a stop market order, once again, what is it? Well, first of all, we broke down what a market order is. It just gets you in or out of a particular stock at whatever price. All the stop means is don't do anything until this price is hit. So this particular order basically just says stop, don't do anything, and then once we hit this particular price, I want you to sell at market, if that makes sense. Type in a 1 if that's fairly clear. Awesome. Now you can have a stop market buy, right? Which is a really good thing to, it's a good way of getting in. So once again, if you're thinking long term and you're like, oh, I want to get in at somewhere around $23 or $24, I'm just going to have, you don't want to set a limit price, but you want to put just a stop price, right? So let's just say you have a stop price at, you have a stop price at 23.55. Okay, and that's a stop buy order. Basically, all the stop is going to do is the stop buy is basically just going to say, okay, don't do anything until, and then because there's nothing after it, it will automatically be a market order. So most brokers will not state that it is a stop market order. It will generally just say a stop order. But when you see this, when you see just a plain stop order, it is actually a stop market order. So just keep that in mind when you do place a stop. It is always going to be a market order. Unless you have specified a stop limit, it will always be a market order. And you can have a stop market sell, which is obviously usually used as a stop loss order. And they're basically just like emergency brakes when trying to exit a losing position. All right, this is it. Limit versus stop limit. Okay, so in this picture, right, you can see this particular black candle is the closing price, right? But we're looking to buy, right? So I'm only going to use a stop limit buy and a limit buy in this particular example for this slide. But because the stock is currently the entry price is currently below where the price is right now, we would use a limit buy because the price is lower. So it's usually used on trades to buy on a pullback. So for example, you've got the nice little push higher, and once you've got this push higher, you're like, oh, I want to buy on a dip. So you would set your limit buy either here or down here, and then the stock would come down, hit your limit buy. It wouldn't actually buy the stock or buy that particular option, whatever you've used, until it hit that price, because the price is lower. Now, if you're looking to play a breakout, for example, you would usually use a stop limit order. All right, so this is when you're waiting for the bullish trade to go higher before the entry. So for example, this one, if we were to just place a straight out limit buy order, because the price is already lower than where we have set our entry, we would get triggered into this particular trade instantly, because we have said that we want to buy for this price or lower, right? So all the stop is telling us is don't do anything until we hit this price. Once we have hit this price, we want to buy at a limit of X, Y, and Z. So in this particular strategy, you would use a stop limit buy. So that's basically it. Is that fairly clear to everyone why we would use a stop limit? Does everyone understand the difference between stop limit orders and limit orders? Sweet, perfect. All right. Well, that's pretty much it for that slide. So I'll leave this alone now. I'll get rid of that. Now, let's dive into the markets, because we are currently gapping. The markets are open tonight. However, the ASX was not open today. So we'll have a look at what's going on pre-market, and I'll just kind of gauge what I feel is going to happen, just to give you guys a fair idea. So the SPY is currently at, well, it was at 278 as of Friday, but as of Friday, and as of Thursday, and we are currently gapping down to 275. Now, what's interesting about that is it is just clearing. If you just see here, it is just clearing that particular low of this candle. The low of this particular candle is 275.47. So if we have a look at the 5-minute chart, and we just turn on the extended hours here, we'll see that the volume is starting to come in. We're starting to get a little bit more action. So if this level here gets broken, most likely we're going to go lower. Okay, there was a lot of people selling on Thursday in the afternoon because they knew that the markets were closed and nobody wanted to hold over the long weekend. Usually that's what happens on a long weekend. There's usually a small sell-off, and we have gapped down. So most likely we'll probably see a nice little retest higher, and then we'll kind of see if we're going to bounce off this particular support level at 275 or crush lower. Have a look at the E-minis. Now, the E-minis pretty much sold off as soon as the market was open this morning. You can see here, really, it really was a very nice fade. We had a beautiful retest gap, and we just filled that gap within minutes. And we fell from 28.16 down to 27.16. So we fell down 100 points in the space of 15 minutes. So, or 16 minutes. Really, really good futures trade. I actually missed this one in particular. I didn't see this until I wasn't looking at the markets until here. So, yeah, it would have been a very good play, very nice play. This gap was almost definitely going to get filled. And also because of where we have risen to. So if you have a look here on the daily chart, I'll just zoom out. So we had a retest gap. It was a green candle gapping up. So we were almost certainly going to retest at some point. And we have come up a fair amount where we are right now. So I do think we're already up 15% in the last week and a half. So I do think that this is most likely where we are going to start to fade, and we have hit our head against the 50-day EMA on the shorter term moving averages. So it just makes a lot of sense to kind of dip down at least a little bit. So just keep that in mind. The Q's gapping down slightly to 198, which is just below that particular candle. Not as bullish as the SPY. A lot of the tech companies did have a little bit of a bearish day on Thursday. The IWM, we have got this little retest gap right here. So I do expect that to definitely fill, most definitely fill. And the All Ords obviously did absolutely nothing today because there was no trading. Crude oil, I'll just go to US oil here. So this was my drawing. You've seen this every day. This is what I expected to happen when we came up. We've almost come back down. I missed this particular buy by pennies, literally pennies. Did have an order here at 22, and the low of this candle was actually 22.07. So I never got filled on that particular one there. But crude oil is forming somewhat of a inverted head and shoulders pattern by the looks of it. So that's good to see. And gold is just gapping down and fading higher. Most likely we're going to start to break out soon by the looks of this. Gold is obviously going to start to pick up because the SPY and the overall markets are looking a little bit weaker here because we already have come up a fair amount as well. So just keep that in mind. And last but not least, the Aussie dollar has just gone bullish. So we've created a nice higher high. We'll see how we travel over the next couple of days. But if we come down and we find some support here off this particular previous high and these shorter term time frames here, the shorter term moving averages, then it'll be looking to bounce. So be very interesting to see how we travel with that one. The volatility index had a small gap up, nothing to write home about, but we are looking a little bit stronger in the markets, which is good to see. Allison says, can we look at Disney if there is time? Yes, there is definitely time to look at Disney. There's not a whole lot to look at on the list here. MGM. And all right, MU and SQ. No dramas. Perfect. Alrighty, so I'll look at these ones first, and then we'll have a look at the option pricing calculator, and we'll go through that. First one off the list, TNK. TNK. Now, I'm guessing this one is for the US market. So TNK, this one does look extremely good. We are currently gapping up. We're above the 200 simple moving average. Here, we've had a very nice bounce here. Take a look at the weekly chart. Wow. off the 200 simple there. Got really nice increasing volume. So I think you could buy this one on a dip just because we did have a very wide range. I would have a very wide stop on this particular one here as well, guys, just because the last on Thursday, we had a 16% range, which is quite a large range. That's a lot of volatility. So if you are looking to buy this, probably look to buy on a pullback. I'd say at least 50% of this particular move, because if you have a look at the 5-minute, you can see here was a fairly volatile move. And some of these people back that bought down here at this particular level would be looking to close out their positions at some point. So I'd probably go about 50% of that particular move if you're looking to buy, and I would have a stop down here below the 200 if you are looking to play this particular one. So yeah, that looks fairly okay. Awesome. So if you guys wanted to look at that one, there is your setup. I'll just put this into Slack for you as well. Actually, we might even set this one up as an official trade. Yeah, I'll set this one up as an official trade. I'll update the sheet, the journal for you guys. But just for now, I'll select this and I'll put it in the Slack channel for you all. TNK, oops, swing. Perfect. All right. TUFN. TUFN. AMD, Netflix. Awesome. So TUFN. So this one's looking quite interesting because we've created a higher low and we're fairly flat on the day. We haven't got that much increasing volume at this point, except for this particular day here. So that green candle there does look surprisingly good. So we just go into an hourly chart here. Let's turn off these extended moving hours, see how we're looking. So we've got the 200 simple moving average on the hourly. I'm probably going to leave this one for at least another day or two. So the shorter term moving averages should be looking very nice. Yeah, they're looking okay. So TUFN, what I am looking for, guys, here on TUFN is I really want a strong close above the 200 right here, because we could very well just hit the 200 like we did at that point there and then roll even further down. I mean, how much further down can we go? Probably ask that question, but I want to see some strength above it to kind of support this particular price level, and then I'll be looking to buy on a dip on the shorter term time frames here. So once we start this trend, because we could very well just trade sideways here for a little bit, but once we start to create a higher low on the shorter term time frames as well, and we start to see some strength picking up above this level here, then we'll look to take this one bullish. So I'm going to look at this one again on Wednesday. Oops. So TUFN. Perfect. eBay and CBA, absolutely. Throw them in there. eBay and CBA. Sweet. They wouldn't have moved at all since since Friday, but I don't think we looked at them on Friday or Thursday. Sorry. No, we did. Sorry, Friday. It was Friday. Okay, so TUFN looking good. We'll keep an eye on it over the next few days. And Facebook. So Facebook is looking delicious. Very nice little double bottom here. Missed my alert. Probably wait on this one a little bit because we're just here at the 50-day EMA. On the shorter term, looks really, really healthy. You got some really nice high lows here, and we've got some higher highs here. So we are just channeling at the moment, but we're at the top of the channel. So if we can pull back a little bit and we can come down to around here, then we'll be looking to buy off the 50-day EMA, which is most likely going to be around about 166-ish. So I might move this alert up to 166. 166.50. 166.50. I'll put the alert there so I don't forget about it. On the daily chart though, looks really, really nice. If we come back down to these shorter term moving averages, makes a ton of sense to kind of just bounce and move higher. We would obviously have our stop somewhere down below here, because if this is going to start to pull back, it's going to do something like that. So Facebook looking good. 3D printing. Ryan says, do I think the market is going to drop again after the impact of the stimulus wears off? I think eventually it will. Yeah. I think eventually it will. The short term, I don't know how long this short term little bubble is going to happen for, but I do eventually think it's going to drop. Yes. I don't know how far it's going to drop, but it may just come back down to the lows and that's about it. So this one I did not keep on my radar because we had a very nice close above here, nice end of day close. You can still use this particular entry and stop if you are wanting to keep this particular setup. This is a long-term setup, guys, if you are looking at this, by the way, just because of where we are. This is a monthly chart. I mean, we are down there, really down there. So anything that you're looking on 3D, really have a long-term perspective. Obviously, if you're looking at the hourly chart, you could get a tighter stop on an hourly chart. But I think it's going to be a little bit too aggressive in this market because we have, over the last week here, we fell 30%, right? And then the week before that, we rose. How much did we rise? We rose 40%. So realistically, you're not going to be playing this one short term. If you're looking to play this thing short term, wait till we come back down to $6 before you do even look at that. Because if we're getting 30 to 40% moves in the stock, 30 to 40% swings, this could just keep on happening. So, it could be a very wild one. So if you are looking at playing this thing short term, just look to buy as low as you can. Ryan says, lots of people are afraid that we are yet to come off the worst if it drops. Yeah, I mean, we'll have to wait and see. We'll have to wait and see. At this point in time, I wouldn't be overly bearish. When I say overly bearish, I don't mean just buy everything up. I just wouldn't be overly bearish. I wouldn't be shorting too many stocks down here when they're at the lows, when they've already had massive pullbacks of, 50% and some, bit more. So just keep that in mind. We can consolidate here for, 6 months sideways. Same with the rest of the market. Like we could come up to where we are now, come back down to the lows, come back up to there again, and then go back down, and then we can come up before we kind of break down and go lower. If you take a look at the SPY, I'll just show you guys what I mean here. So on the daily chart, for example, when we had, we had this big pullback here, around 2008 when we had this crash. So we had a drop of about 20%, right? And then we had a increase of about, 10% over the space of, 4 months. And then after that, we created another lower low, falling another 14% before we fell, the overall fall of here was another 50% from that particular drop. So just keep that in mind. Like we can be here, like this was 4 months. So where we are currently, if you have a look here, if I'll just press replay. Let's just come to here. All right. So if I just push replay here, you can see see how the 50-day EMA is kind of keeping the stock down, right? At this point, I wouldn't be overly bearish, but I wouldn't be overly bullish either. So anything that I would be looking to do at this particular level is going to be non-directional. If I was trading this particular period, if the stock came back down to here, I would be bullish, even though it was the bottom of the market and we could potentially go higher. Oh, sorry, and we could potentially go lower. The only reason I would be bullish here is because it's a relative low, and I know that stocks don't just crumble lower the whole time. At some point they break, but usually they squeeze, they squeeze lower before they kind of break. So you can see what kind of happened here. It's fairly obvious. Here's the nice little squeeze happening. So this is where a lot of people started getting on bullish, right? After we started to break these highs, you can see we've got this nice little bullish pop, right? We've got a nice little support. And then here, as soon as this level is going to break, I would be very bearish at that particular time. Here's the little break, the retest, and then the fail to go lower. And then here we've created once again a lower low. And at this point, I mean, we're still having trouble getting above the 50-day EMA. So where we are currently, we could potentially just be right here. We could be right there, and then we could come back down to the lows, come back up, probably roll back down again. And that, I mean, that space there took, 6 months, just to kind of put it in perspective for you to where we are right now. Oops. So that's where we are right now. So, I mean, even back here when we had this little drop of, in 2018, we came back up to the 50, came back down, came back up to the 50, went back down. We came back up slowly to the 50, traded sideways, went higher, and then we started using the 50 as a support, and then this was a really nice dip back down to this particular level here. So you can see stocks don't just go straight back up after these massive drops. They just take their time. So I do expect us probably to trade sideways for, I don't know, maybe 6 months at least. I don't think we're going to make new all-time highs this year. which is a pretty big statement because we've still got a lot of time to go, and it's only got to go up another 20%. And we have already risen 28% in the last 3 weeks. So yeah, we'll see, man. We'll see. Kind of went off on a little bit of a tangent there. So yeah, space, SPCE. So this one's, we'll have a look at this one because we are in this particular option. Virgin Galactic. All right. So we did buy 175. It's currently gapping down a little bit to 1506. Yeah, not overly worried about this one. If you really want to, you can move your stop, you know, to the low here. Increase your, decrease your risk exposure. I'll probably leave mine open just because we've got a little bit of time left. And because we're going to most likely, it is a retest gap. Red candle gapping down, so it'll most likely, you know, come down, retest a little bit. See what happens there. So SPCE still looking okay. We'll probably just leave that one. And then on Wednesday, if we're still not up 1R on Wednesday, most likely we'll probably just close it. Close it for a small gain. You can close it now if you really want to just take the 1R. It's about 1R up at the moment. So SPCE looks good. SAVE. Now this one we are in already. So Spirit Airlines, it's going to be interesting. Got a nice little gap down. Hitting our head against the 200, against the 20 EMA on the shorter term moving averages. I mean, we got in at $12, so it's got to fall a fair amount from, it's got to fall about 10%. We're already up 10% currently, so that's not too bad. I'd wait. It's only been 2 days. We've got some brilliant volume coming in here. So anything that comes, just remember this was a retest gap too. So you're going to expect a short-term pullback and then a nice little trade higher. The only reason we got into this one is because we had this retest gap here and we did come down and we retested. So it just made sense to get in bullish. But now we had another retest gap. So once again, we'll wait for this little retest and then we'll trade that higher. So we'll keep that there. Disney. Good old Disney. So Disney sort of following Mr. Squiggles a little bit. Not overly. It did create that higher high that we wanted. And we're currently gapping down. Allison, I think you were going to buy to close. I think you're pretty happy that you didn't. You must be pretty happy that you didn't buy to close that particular option. Would have paid a fortune to buy to close it and then realize that it wasn't going to end in the money anyway. So this week you could probably sell another option. If you are looking at selling another option, you could very well just sell it up just above that candle. And there will be some fairly decent premium there because it is a, you know, was a fairly bearish day. So you could do that for this week. And you've got a lot of things in your way. I mean, if you got exercised at 109, I mean, you would be happy with that because you were happy to get exercised at 105. So, yep, perfect. And they got the 50-day EMA here that's most likely going to act as a resistance as well. So if you do, you know, just take the premium from the market, just sell another one the next week as well. So looks good. Well done. Disney looks super saucy. On the daily, how are we looking on the, sorry, on the weekly? Let me just hide these drawings and go to the longer terms. On the monthly, Yeah. Yeah, that's a brilliant trade. I mean, I'd try to hold on as long as you can, really. Just keep trying to sell that premium, keep lowering that dollar cost average if you can. Sell as high as you can because you've bought at a very good price. All right. MGM. To be interesting. The old casino stocks. Pretty much every stock is hitting their head against the 50-day EMA, or they're struggling to get above it. So I showed you guys what happened in 2008 when we had the big drop, and you saw how long it took for these stocks to recover after that happened. So, I mean, we are getting close. And what's interesting about this is earnings is just around the corner. MGM has had a massive drop of about 80%, and then a nice little push higher, and they have closed their casino, so no one's really making money. But I mean, yeah, they still do make a lot of money long term. You can see what happened in 2008, how long it took for them to recover. They traded sideways for like a good 4 or 5 years. So yeah, a little bit different, this being a pandemic. So, you know, really, really nice inside day candle though. So on a weekly chart, so have a look at this particular candle right here. So brilliant weekly play. You could have very well had an entry above that and a stop below here. You did see insider buying. Yeah, nice. Makes sense. I mean, look at all the volume coming in here on the last few weeks. Obviously, that's buying and selling, but, you know, there's still a lot of volume coming in here. It is very low. Buying is at a very, very good discount right now. And I mean, even if you were to set this particular trade up, I don't know if you'd get triggered. You could try, you know, an entry here with a stop down here. Yeah, you could. Let's look on the 1 hourly chart. Yeah, I mean, you could probably move that up a little bit, to be honest. But it makes sense to be buying. It makes more sense to be buying here than selling your shares. And this is a higher high as well as a, you know, higher low. So we'll keep our eyes on MGM as well. I'll put an alert on this one just at the 50. I'll call it 1350. 1350, which is probably gonna it's probably gonna hit that tonight actually. Change it to 1335. 1335, not that much lower, but it's still just there. See what happens. Alert me. Cool. Keep an eye on that one. MU. So we've got a few more stocks left to go, guys. MU. So JP, you'd be happy about this particular spread. I did mention that we would most likely reject this level. And we're gapping down once again. So this one was a really good spread because there was a lot of things in your favor, like this 200 simple moving average. Remember when you're doing credit spreads, guys, the long-term moving averages are your friends. Just remember that. So for example, if you were selling a bull put spread, you would sell a bull put spread down below these particular levels, and you should be fine. You know, you should be fairly fine. And if depending on how many times you would have done it, Like for example, when we had this big drop here and a lower high, you probably wouldn't look at getting into a bull put spread at that particular point when the market was falling off a cliff. You probably would have looked to get into a bear call spread at that point. And here, once again, we had this nice little bullish push. We got the 200. So selling a spread up here, just you'd be fairly unlucky to be having to unravel that particular position. But looks good. 17th, it should be the end of this week. So that'll most likely close out nicely. Currently at 44. 44, just so you can see, JP, the market's got to increase by over 12%. MU's got to increase by 12%. Sorry, not the market. It's a fairly big jump in 4 days or 5 days. So that one looks good. No dramas. That's pretty much it on MU. I don't see any bullish movements here, guys. If you're looking to buy the dip, except on a monthly chart or a weekly chart. I mean, if you're getting on a weekly chart, just wait for the 200, and then you'd be looking to play that however you like. If we come down a little bit further, you could probably sell a spread down here. Now, being a weekly chart, guys, it's going to be a monthly spread, not like a few weeks. So just keep that in mind as well. All right, Square, good old Square. What's Square doing? Not a whole lot, holding up nicely. We did get out. I did get out of Square on Thursday for a nice little gain as we were rising. What's the wrong one? Where are we here? Did get out at 62.57, which was, I keep pushing the wrong thing. I'm gonna move this over here. So 62.57. We just had a really nice push up, like a very, very aggressive move at open. So I was like, well, at some point this is gonna retest. So, you know, from the previous day, it was like almost a 10% rise. So I was like, you know what, happy with that. Let's just get out. So a lot of you guys, if you did have that set up, you probably would have had your 2R target hit anyway. Being that our 2R target was $60. So yeah, Square's looking good. On the daily chart, I mean, that's an insane looking candle, rejecting the 100 and 200 simple moving average. I mean, looks good. Looks good. Probably going to consolidate a little bit more before we go higher. All right, AMD. AMD. If you're in Square, you can look to sell an option on Square. Not sure where you guys have bought in. If you bought in at $60, you know, you could sell the 65 for sure. The $65 option, probably for this week, and you get a little bit of premium. If you get exercise at 65, that's still not a bad price. You've got the 100, 200 simple moving average in the way. Should keep the stock down for a little bit longer. How about puts? What, for selling puts or buying puts? Selling puts, yeah. I'd wait another day if you're going to sell puts. So generally, guys, if you're going to look to sell puts, try and sell on at least a 4% down day, just because the volatility is a lot higher. And as you can see with this option pricing calculator, the higher the volatility, if I change this, the premium, if I just change this to like 110, for example, it changes the option price. So it was $8, now it's $6. So when you want to sell, obviously, when you've got a down day, volatility is going to be higher. Sell options on a down day. You can see we've only dropped about 2%, close to 2%, and we most likely will continue. All right, most likely we're going to continue a little bit more. So if you're looking to sell puts, wait till tomorrow at least, and then check the markets again. If we are looking that we're going to gap down, then look to sell some puts probably down here somewhere. Makes sense to be buying at 42 anyway. Looks good. All right, AMD. AMD. Retest gap, gapping down to 47.85. Small little retest gap. Got the 100 simple moving average at 45.95. Got a nice high low. Relative highs. Struggling to get above here. I mean, it looks bullish. Definitely looks bullish. Just know that we've got earnings just around the corner. Personally, I'm expecting us to probably gap down, but we'll have to wait and see. The last 3 months have been pretty hectic, especially because they've already dropped so far. If they have a bad earnings, it's probably already priced into the stock, and we may just be completely flat. But if we get a gap up, you'd be looking for a gap above here if you want it to continue. If we get a gap down, right, most likely it is going to trade higher. Be a nice little fade depending on where we gap to. So where's that? That's this week, I think. 16th of April. Yep. It's Thursday, I think it is. Yeah, Thursday. So Helen, I know you're in this, so keep an eye on AMD. You can also sell puts on AMD. On where, obviously, if you're going to sell these over earnings for this week, just sell as low as you can. And as soon as earnings has been over, you should be able to buy to close that option before it gets triggered, unless it's in the money. And you should be able to just kind of take that premium from the market because the volatility is already going to be really high on AMD. Netflix. NFLX. Gapping up when the market is gapping down. I mean, they have just been super strong. Brilliant hammer candle on Thursday. Super strong, guys. Won't be long until Netflix creates some new higher highs. We've got earnings just around the corner. Yep. I think Netflix should create some new higher highs, or at least a new all-time high this year, just based on the duration of this consolidation phase that we've had. It's a very long time. 2 years. Looks good. If you're looking to play this as a day trade, I get it. Just know that you probably get, like, if it does gap above this candle, which would be the high of this candle is 272.10. Sorry, 372.10. We're currently at 371.96. If we gap above this candle, you should see a nice push to 77. And then I'd see some selling. So you probably start to see it come up and then most likely reverse at that point. That's the first level of resistance right here. Makes tons of sense. But there's a lot of volume coming in and a lot of buying pressure coming in at this particular price. The 5 minute, did this happen just pretty much the whole, this happened at the end of the day? Oh, the whole day. Yeah, super bullish for a short-term day trade if you're looking at it. eBay. All right, eBay. So eBay is pretty flat on the day right now. Daily chart looking good. We've got earnings just around the corner. We've had a couple of retest gaps just not being filled just yet. We've had 3 retest gaps not being filled. We've got the 100 simple moving average. We've had a move up of 20%. So if you're in this and you're looking to, sorry, you're looking at over earnings, trying to earn some premium, I would look out of the money very far. So I'll probably look in, say regular May around 36, but I'd also get into a collar, a short-term collar. So I'd sell the 36 for say regular May, and I'd buy the put for maybe the first week of May, or even the end of April. The only reason I say that is because this is a fairly decent move. 30% in the last 3 weeks. Yep, she's going to go back down for sure. For sure. I know everyone's been buying stuff online. But anything, I think if we get a gap up, most likely it's going to fade and go back down. We're still in this descending wedge pattern that we're creating. And I think we could be here for a lot longer. 1, 2, 1, 2, yeah, probably be here for another year, until the end of the year at least, before we break out. I think we're going to kind of squeeze a little bit here first before we even break out of this level. Makes tons of sense. And last one, CBA. So CBA didn't do anything, obviously. I think I mentioned on Thursday to look for a gap down on CBA. I don't think it's going to be a big gap. It'll probably be a small short-term gap, and it'll most likely fade and go bullish. We'll see. It depends where we gap to. If we gap below that low, we'll go lower. If we gap to this level, there's a potential that we'll most likely just trade up and down at that particular level. Long term though, buy the dip. Long term. CBA, if you've got shares, sell options. Sell options above 65. At least get something for your money. Because if you bought at $60, that's almost a 10% gain in your option price. And if they're long-term shares, you're just looking to take some premium from the markets. Makes sense. And then if you get exercise called away, take the 10%, look to buy on a dip. You'll probably buy at the exact same level a few weeks later. Looks good. So I know I have gone over, but does anybody is there anyone that wants me to go through the option pricing calculator? I know there were some people that seen me go through it on Thursday. Sorry, on Friday. I keep saying Thursday, Friday. Or is everyone pretty self-explanatory? Yep, I can take you through it by all means. So what this looks like, all right, let's just use Square for example. Now, I mentioned that you don't really even need an options chain. So for example, if you're using interactive brokers, a lot of people have been asking me how have I been getting the prices in the past. So you can see here, I'll just drag this across to here. Okay, this is just a demo account, but when you type in your financial instrument up here and you select your strike price and your expiration date, it'll automatically change your chart to that particular chart. So for example, when I was working out the option prices, I would put the two charts side by side. So what that looks like is, I'll just drag this across to here, minimize that, bring this over here. And then bring this back up. So what this looks like is I would, so for example, this is Apple, right? And I'll just change this one to Apple, AAPL. I'd put them on the same two charts. So this is a 5-minute chart, right? And I would look at this and I go, okay, well, this is the last 2 days. And I would get the last 2 days out. And that's it right here. So this particular rise right here, when the stock was at 270, you know, the price was this 975. And then when the lows were back down here, it was 263. You could see that the price was 650. But not everyone has access to this particular chart. I know Schwab doesn't really have this particular chart. They do have it on Interactive Brokers, which is the reason why I calculated, which is the reason why I created the tool, because this data doesn't take into consideration theta, which is the time decay. So as each day goes on, the option prices decrease. So for example, here at that particular level at 270, the option price might not be 975. It might be $9 because there's been a few days that have gone past. So I created this particular tool for you guys here, and we'll just use Apple. So AAPL, right? And it automatically works out what the current price is. It looks it up here on Google Finance and then enters it in. So all you need to do, once you click on that tile, you come up to File and then make a copy, and then it's yours forever, right? So you come up here in your entry price. Your entry price, for example, let's just look at this and say, all right, well, we want to buy on a breakout, right? We want to buy on a breakout above. We'll use these figures. So 269.50. Okay, so 269.50. We know that roughly it's going to be 950 here, but so 269.50 is the stock price, right? So we would come across to our tool. Let me just make this. Bring this across to here. All right, so 269.50, 269.50. Okay, and the stop price, let's just say we were looking at this and we were like, you know what, I want the stop price to be somewhere below here. So we'll say 260, 266. All right, so we'll come here and we go 266. If your risk is, why is this like that? Why does that say? I don't know why that says that. It's a lot. So if your risk is say $300, right? We're looking at buying on a dip, right? We're looking to play a breakout. Yeah, exactly, correct. So I've got puts, but also I haven't changed the strike price or anything either. So for example, here if you've got a risk of $300, you just need to come through and put in the rest of the information. So the call option, right? The call option we were looking at was we'll come back to Interactive Brokers. So we wanted to find, sorry, I'll come back to here. We wanted to find the closest strike price to our entry price, which is going to be $270 because it's $269.50, right? So $270 here, right? So we would change our strike price here to $270, right? And then it says implied volatility or IV, right? And as you can see here, this is for the next 4 days, right? What I might just do is make this a little bit bigger. There we go. We'll go 11 days. Okay. Give it a little bit of time. So we'll go 11 days, and you can see up here your IV is 36.9, right? So first of all, we'd come down here and change that to 11 days because we know it's 11. And then our IV was 36.9, right? And our interest rate, let me just see here. So interest rate, if is just the Federal Reserve interest rate. You can come here, click on this link, comes up with this link, and it'll give you the interest rate here. So that's totally fine. If you ever lose it, it'll change. You'll know about it if it changes, that's for sure. Now I'm just trying to see on Interactive Brokers, the yield percentage on, so if I go to Apple, APL, let me just get up a new window, quote details. Oops. I think it's in quote details. Well, there's the implied volatility there. Oh, that's on this option. Just Apple. You would look up their dividend data. You can either, I'm not sure if they show it on Interactive Brokers, but they definitely show it on Yahoo Finance. Yeah, let's get rid of that. So their dividend data for Apple, I think, is about 1%. I'll just double check this. Quote detail, Apple, oops, APL. So I'll just drag this across to here. So their dividend information here, their rate is 1.15%. Okay, so if they don't have a dividend, guys, you would change this to 0. But because this one is 1.15, you would put in 1.15. And this is worked out as 11 calendar days. It's not trading days, so just keep that in mind as well. Most brokers are calendar days as well. And this would basically just spit out what type of order we want to place. Now, remember we spoke about stop limit orders and limit orders before. So, for example, because the price, we want to buy this on a breakout, right? The price is going to be higher. We need to have a stop limit order, which this actually tells you that. So it'll tell you that you need a stop limit order, and you can buy one contract based on this particular setup, right? You can buy one contract and your stop is going to be at $3.22. So down here, the price of the option will be $3.22, and the target entry price is going to be $5.75. So the current option price, it says, is $4.04. And I'll just double check that. That's supposed to be 36, I think. Just 1 second. I'm pretty sure it's supposed to be 36. Apple, 11 days. Oh, it's 42. It's actually 42.86. So here, that's what I mean by. So this is actually 42.86. What does it show here? 36.9. Use that one. 36.9. It's close. 36.9. Okay. Current option price is 588. Right. And that's based on. So if we just drag this, if I just drag this across, is that 11 days? Oh, that's 12 days. 12 days. So this is actually telling me, because this is actually telling me, all I did was change that particular date, and it's told me that the option risk is too high. So you can't use this particular setup based on this particular risk. So you would have to tighten your spread or tighten your stop. So for example, your stop would have to be like 266.50 66.50, and then you can get one contract. Yeah, so that makes sense. All right. So, okay, so here it tells you what the current option price is, which is 618. The strike price that you're choosing to buy, and it tells you the entry price of what the stock price. So the entry price of what the option price will be once we reach 269. So remember how I was saying that on here it was saying 950, but because we had a few days go by, it's most likely going to be cheaper, like $7 or $8. That's the reason why this is a lot cheaper. So you can see here, this actually calculates your theta as well. It doesn't just calculate delta. Takes everything into account, takes everything into consideration. Obviously, if you were buying on a dip, you know, and you were trying to buy below the current price of say 265, this would automatically, sorry, stop price would have to be below here, so that'll be 260, 264. 260. Why is that not changing? 265 should be cheaper. I've missed something here. Well, you'd be buying the 265, for example. Yeah, you'd be buying the 265. So you'd always have to choose the nearest at the money as possible. And then you see you got 265, and it'll tell you that you need to have a limit order. And that's the particular price that it is now. This is the particular price that you'll be buying at, etc. So I know it's a really fairly rough, but you know, you kind of get it. It's got the nice little steps here for you, step 1, 2, 3, and 4. Have a play around with it. It's really, really intuitive. The option price is pretty much smack bang in between the bid and the ask price. So it's going to help you, you know, if you're looking at a stock chart, oh, let's bring this one up here, and you're like, oh, well, I want to buy an option. I want to know what the price of the option is going to be here. You can use this as selling puts as well, too. So for example, you know, you can work out what the price of the sold put is going to be down here when the stock price gets down to here. For example, you can work all that out, which is really, really great. It's going to be a really, really good tool for everyone to use. But yeah, I hope you guys like it. Have a play around with it. And that's pretty much it. Hope you guys enjoy that. What do you guys want to look at on Wednesday? So I'll just copy and paste these to here. I know we've gone a little bit over time tonight, guys, so sorry, I apologize. SPCE, AMD, and SQ. So SPCE, I'm going to look at that one tomorrow. SPCE, AMD, SQ, Tesla, ATVI, and CBA. Also look at APT because that one's going to be most likely gapping down tomorrow. Looks good. All right. Well, that is everything. I hope you guys enjoyed your Easter. Hope you guys liked your little present with that little options calculator. And until next time, love life, live life, and trade. I'll speak to you all soon. Bye.